Welcome back everyone to the Sandpit. You're here with Sandy from VIP Traders. Tonight we're talking about RSI, which is also called relative strength index, isn't it? Relative strength index. Yeah, sorry.
Yeah, that's it.
A little bit tired tonight. It's been a big day with the kids and sports, but the important thing about the RSI is that it is a leading indicator, not a lagging indicator like the moving average. Moving average gives you data after the fact it's happened. RSI gives you the data basically live. It moves with the volume, with the stock. The reason why we use it is, I'm not going to go into the details. For those of you who watch what I teach it a little bit different. I'm going to try and explain it to you guys without the maths in it and just tell you what I think about it and how you can use it. It basically tells you the emotion of the market. It moves with the volume, as I said. It is trackable. It is trendable. There are different things we use in it to catch reversals, whether it be at the top or the bottom, or actually you can track it and chart it to track trends. And the reason why we track trends is because we look for the top and look for the bottom. We look for that trading channel and we try to trade in it. Swing traders try to trade in that channel. Day traders just like to find a tick, whether it go up and turn and get out, or just a small little channel, whether it be the 5 minute or 1 minute, and get out and wait for the next one. So I've just pulled up a random chart here, LQDT. It's been going fairly well. It doesn't matter. I thought I'd bring it up. It's got some nice peaks in here we can use for this training. So basically the RSI chart, you've got it here. It's broken down into three sections. You've got top section, bulls own the market. All right. The bulls are dominating up here. So there's a 70 and a 30 line. That's the way I've got it set up. You can do it differently. It's, again, your trading style, whatever. This works for me. This is what we're going to use. So in this, between 70 and 100, we got bulls. Down here, we definitely got bears. And in here is the arena. Get in there. All right, we've got the arena. This is the fight between the bulls and the bears in here, okay? The reason why we use the 30 and the 70, it basically just marks oversold or overbought. Look, I'm not gonna lie. I don't really know why it's put there. I read books. This is what they put there. You click on the indicators. You go to RSI. You just find one. You click it in. That's the setting. It seems to work well for a lot of people. There's some things you can do to change it. We'll dabble a little in that shortly, but let's get this back here. All right. So you've got this yellow line here. When you look at the yellow line, it coincides with the volume as well. Again, volume is emotions. RSI tracks emotions basically in a graph. And the way that the graph is laid out gives us ways that we can read it. So first of all, I think we're on the daily chart here. We're on the daily chart. Yeah, the daily chart. Big swings you can track with this. Big swings. So basically, I like to add a 50 line in here. The 50 line is a good line. I see the 50 line as the break between the bulls and the bears. It's really strong up here. They're dominating up here, dominating down here, starting to take over at the 50 mark. So you can see here, if you can't see it, we'll just go along here a little bit, but there's actual trends in here that you can track. Now for those of you who watch my other webinars or understand charting, you chart an uptrend from the bottom and you chart a downtrend from the top. So let's just put two lines on here real quick and I'll show you what I mean. It's an average. Don't go and try and find the tips because it doesn't work. has to go through somewhere roughly around the middle. Don't worry about these little ripsaws down here or whatever you want to call them. I tend to just find the average through the middle, and same with going down. I don't know what I just did then. All right. And if we go up here, you can see that down there now. So you can see how an RSI actually trends with the stock. The emotional trend, and then it turns, and then we track it down from the top. And it's no different to ascending triangles and descending triangles, as I'll show you here. This is your little squeeze zone in here. All right, and as it drops through this would be here. This one here would be your reversal. Now, it's easy to see on here, but if you want the theory behind this, the theory behind picking a reversal on the RSI is finding the largest peak, so preferable the largest peak in the oversold or overbought areas, and choosing the second, the next, how do they say it? Find the peak and then use the second next highest peak. So 1, 2. That's the peak that they say that's the reversal one, and you can see here that's the one that actually reversed. Some people like to, because I've averaged it, I wouldn't like to use this line as my sell signal. If it continued to fall, you try and sell before it fell too far, but you can see here how it's come back up, created another peak right on the 70 line, and then actually fell. This one would actually be your sell signal here. That one there. All right, so find the major peak. Don't forget RSI only goes to 100. So your closest peak to 100 or whatever you think is close. And then as it trends, find your second peak and sell. And then a reverse is the same. So you can see here, you've got your highest peak here, your lowest peak here, second lowest, second and then third, which would be your second lowest after the major peak. Again, so that would be your sell signal. If you go and have a look at the chart, let's just draw a quick line here. Let's get back into this. Let's have a look and see where it lines up. So you got a line there, and then a line there. Now let's mark our peaks in a different color. So let's say peaks are blue, and then the lowest peak here in blue. Let's have a look. So you can see here the lowest peak. You can see why they say the second, because it hasn't quite finished. One peak, second peak, reversal. Look at that, straight up reversal. Again, it's easy to see because the chart's here. This is basic, but this is just for training purposes. It's hard. It's hard to catch that second peak because you get emotional. Oh, I want to buy in, it's going to turn. But if you wait for it, it pays off. Look at this. This is on the daily chart as well. So let's come over here. Now we have our first peak. With our second peak just in here, but then our third peak, which is the second peak after the largest peak, and then it drops down, and that's our sell signal. You can use the 50 as a buy or sell. A bullish market, you could use the 30 mark and sell at the 60, or in a bearish market, you could use as it's coming back down for selling, you could sell at depending how much it goes up, you could either sell at the 80 or the 70, and then get out of your trade at the 40. Don't wait for it to come all the way down to the 30 because you just don't know. It's giving yourself some room here. You can see here a lot of the peaks actually turned at 40. If you zoom out and you zoom through there, you can see a lot of peaks go through the 40. It doesn't always come down. So again, with the top 60, it gives you room to get out of the trade before either drops. You can set a stop loss, and if it continues, happy days. So that's enough on that. All right, so just a quick recap to look for reversals for RSI. Find the biggest peak. Basically find the biggest peak, and then your second lowest peak after that will be your reversal. Rule of thumb, okay? Rule of thumb. It doesn't always happen, but it's a good rule of thumb to look for. All right, trading with the RSI. Now, so many ways you can trade with this. But there's 2 or 3 different ways I like to look at it. Now you don't normally day trade in the daily, okay? What you look for in the daily is where the RSI is. So let's have a look at current days right now. It's like anything. The steeper the line, the more volume or more emotion you have in this stock. And you can see here we've got just like nice little curls here. Yeah, nice little curls. And all of a sudden we've got this ripper here just going almost straight up. This is what we look for. In a daily, this is really good. Plus, it's called, what I like to call it, in this zone here is a supercharged zone, because just look how much bigger the candles are. And we'll go over the candles. We'll go over some things to look for and what it does. Don't ask me why, but I'm going to tell you. On a daily, we would be looking through, let's just say we're looking for a watch list. We come through the daily, and daily RSIs like this. Then we step it back. I've got 8 hour, 4 hour, 1 hour. You just keep stepping it back, looking at the MACD at the same time, seeing where the stock is in its cycle. This potentially could be something on the watch list, because there is a lot of people interested in this right now. It uses candle closes to get the data, so we can see candle closes have been very strong. The trend is continuing. You can see it's peaked down a little bit. We've got, basically, this is the highest peak now. So what we're looking for now is that second highest peak before it's going to drop. Now let's go down to the 5 minute. You can see here RSI. So let's bring up the MACD real quick. Now I like to trade with these two together. Get rid of this guy down here. We don't need the stochastic. That's for another session. All right. You got to watch these numbers here as you're going, but for best entries for day trading is, for those of you who have watched my MACD webinar, we like to find the best trades in, what is it? It's spring, isn't it? Spring, summer, fall, winter. Yeah. So down the bottom here is spring. Now, for the best opportunity to get the longest run, you want to get the MACD underneath, because you want to maximize how far it comes up. And it's just like the RSI. If the RSI is low on emotion, it's down here. You can see here, it's dropped below the 50. You can see the candles get smaller down in this 50 zone, under the 50. And it's pushed itself down. We've gone green. This could have almost been an entry here, but it's gone back to red. Any one of these entries, I reckon, would have been fairly decent on the 5 minute, anywhere down here. But you can see the RSI actually peaked right here. That was its lowest mark. So you can see here, we got a peak here. Yeah, but it doesn't work like that. Doesn't always work on the lower time frames. But anyway, its lowest peak here, MACD right at the bottom with the divergence crossover. That would be your entry right there. Somewhere in this zone here. Usually people like to use the MACD divergence as an entry. Somewhere around here, and you could have ridden that all the way up. You can see you've just ridden, as emotions picked up, the candles get bigger. And let's look over this right now. you can see how when it's under the 50, all the way here, you can see the lower it dips, the bigger the candles get. But here we've just under the 50, we've got these little flat pancake candles, kind of. Just little flatties. And then as we hit the 50 right here, you can see they start to get bigger and bigger. Obviously, more trades, more emotion in the trade. And then once I hit the 70 area, the candles start to get really big. And they go. Secret about trading above the 70 is if you can enter the trade here, don't get out until it drops back through. Now, you can see here we've gone to 69.11. You can use a buffer. So let's just say I'm going to get out at 65 or 60. Use a buffer. Don't, it does dip into there sometimes and come back out. If you solely trade with the RSI, if you just look for trades above 70, you will do all right, because look here, we've gone 70. It still hasn't come back. Apart from that little touch, let's add our buffer. It still hasn't come back. So we've gone from, what dollars is this? We got $26, currently at 27. A dollar's a dollar. You're still in profit. It still hasn't come back yet. When you go into the 1 minute chart, you can see here, if you would have traded this from here, in here, out here, in here, and it's still going. It's not as effective as trading with the moving average, because you can see the moving average went positive here and it rode the 20 basically all the way up. It's not as strong, but like I said, if you would have caught it down here and then rode it all the way up, then you would have caught even more. So the RSI just helps you understand where the turn is and when emotion starts to pick up. And you can trend any time frame. And I like to trade a couple of time frames. But you can see here, not so much the second peak, but that would have been the second peak there. You can see you kind of picked up a little bit, and then it turned down. And then if you draw a line here, and the reason why, like I said, I draw a line is to find at least where it's at the top and find that reversal. So you go to you have to go to the largest peak. I like to draw from the largest peak. Don't worry about all this. Just go kind of straight through, average it out. I reckon this is somewhat done. I don't think it's going to go any higher. You can see it's kind of leveled out at the 80 mark. And basically all you're doing now is waiting for a turn down. And there's also always a possibility it's going to come back up, but probably unlikely, and it's actually going to drop through. And then you're going to create the downturn run. And on the 1 minute chart, if you like to track it, look, so a 1 minute RSI chart will give you, say, 1024. You can almost track it for, 4 hours, 5 hours in the 1 minute. Then you can keep going up your time frames to look for bigger trends or look for other things that you're trying to look for. But that could potentially turn here. So we'd like to see that it's under major resistance right here. It may curl around and come back down, or it may find itself on top. And if it stays above 70, it will just keep going. It will keep going. It'll rest here and there, but it will keep going. And again, look, you got above 70 on the 3, the 5, the 15. You can see that the 30 minutes, it's going. Look how straight up that line is. What's the 1 hour doing? 1 hour's heading up. The 4, it's got a nice kick up, and you can see the MACD has turned there as well. The bears are losing traction. The 8 hour's got a nice tick. Let's get rid of this. See that nice little tick there? Oh, sorry. And then the daily. Daily's coming down, but there's potential you don't sell till it crosses back through the 70 line or 65 or whatever you got it set at. So for big trades, if you trade from the daily, you can see here, this is where you would have entered. So if you use the daily, you would have entered at, let's say $10, and when it come back down in $16, $17, so $6 to $7 trade just by using RSI, one indicator. Like I said, I like to use 3 indicators to get more of an idea. This one's just basically emotion. How many people are trading, how much interest in the trade. It kind of goes with the volume as well. I don't know what else. I don't know if there's anything else I can explain on the RSI right now. Does anyone have any questions?
I have one question, Sandy. Yeah. So are you setting up a scanner to read this? Like, do you have, like I use Thinkorswim, and I can set up all kinds of custom scanning.
Mm-hmm.
Are you setting up a scanner so when it sees the RSI at 70 or slightly below, that it'll trigger an alert to you to watch this stock?
If that's what you have it set to, that's exactly, you could do that exactly. If you have the settings to do that, then that's something you can do, yeah. I probably wouldn't set it at 70 because it leaves you no time to get in the trade, maybe 68 or 65.
Yeah.
But yes, if you had a scanner with the ability, you could set those settings up, and once it hits that 68, you send you an alert. You could just look for trades where you're looking for RSI above 68, and I guarantee.
So is that when Mike says scanners are up again in an hour? Is that, I would assume that's kind of what he's speaking about, right? That.
So we're chasing high volume. So see these peaks here, these 2 peaks here.
Mm-hmm. Yep.
So scanners would pick that up. They would pick this up. And they would pick this up. So I'm not sure what he's got it set at, but I would say the scanners would be looking for above average by a certain amount. You got to remember with volume, 1 to 1.5 times average volume is what you're looking for a move. So you need to make sure that you're looking at that average, because if you just say, I'm just looking for RSI here, you need to make sure that you're really pushing above that average volume as well to make sure it's worthwhile of a trade. Don't forget that, because peaks, if a stock moves up considerably with no volume, it's guaranteed to drop down. It's just a false breakout. You need to have the volume to back a proper breakout.
I think the 1 to 1.5 times, I think that's the piece I'm missing, because I at least as of late, since I've been messing around with these scanners, and there are different ways to read. I'm either late or early. Okay. I'm not like on time. I'm usually 10 or 15 minutes behind something that moves quick.
Mm-hmm. And sometimes it's hard to find stuff like that as well. Sometimes, the volume needs to pick up, it needs to get to average, but then it needs to continue to climb. And depending on how fast it climbs, like you said, you can already have missed that initial ramp up. So it's tough. It's tough.
Yeah, ACY is a stock I've been following for quite a while.
Yeah.
And it seems to squeeze like every 10 to 15 days.
Okay.
Well, and the last couple times I tried to catch it, I was like 15 minutes too late.
So the other tip for that is if you've got that charted out and you've got your support and resistance lines on it, and if there's a certain channel that it's trading in, then set yourself some alerts. I find that when I set alerts on support or resistance, it kind of picks up, it'll alert me and I'll go to it, and I will actually pick up a perfect spot where it's about to either rip or it's starting to rip. So
fantastic advice. I appreciate that.
So if you use TradingView, don't forget, just right click, add alert, and you've got all these moving up percentages, you've got moving outside of channels, inside channels, greater than, less than. There's all these settings you can set. It's phenomenal, but I normally use just crossing up or crossing down on that line.
Yep.
And that works a lot of the time. And same thing going down. If you know that it's dropping, just set it above that support line, and it gives you an alert, and you bring the chart up, get ready for a reversal. You know what I mean?
What platform do you actually do your trades in? Or
Webull.
I know you do all your charting in. You use Webull, okay?
So if I'm in a trade, I'll actually use Webull while I'm in the trade, unless I'm trading in a larger time frame. Trading view is basically just for watching stocks, charting.
Yeah,
Once I get into a trade, I'll actually watch Webull so I can close it then and there. You know what I mean?
got it.
All right, good question. Any other questions? It's a little bit quiet in here. I know it's a little bit unusual for a Saturday night, but no. Well, if that's it, I really hope that the way that I've explained it is a way that you can understand. Just don't forget.
Oh, this was really helpful. It was awesome.
Just don't forget each level of the RSI. The candles get bigger. If that's how you want to look at it. So they're little candles in this range. You'll find the candles instantly. As soon as it gets past the 50, the candles just increase in size. And then once it gets here, they just go ballistic. Here, I'll show you something here. If we go to 1 minute here, you can see here instant supercharged candles. This is what I mean by going over the 70, that. So if you can be riding it up, or even if you get it, if you enter before that and it ends up going up, you'll just get these ridiculously big candles. They just pop out like that. That's why I call it the supercharge area, because it goes nuts and it keeps going. It keeps going. Again, watch it. If it goes up and comes back down, you don't know if it's going to drop all the way to the bottom or continue to slow down. So a lot of the times if I'm trading in this zone, I'll actually get out when it drops down past the 70. So just keep that in mind. It won't stay up here. It stays in this channel for the most time. See the battle arena? If it comes out of there, there's mass amounts of interest. It's going to drop off pretty quick because the price goes up so quick, people sell out of it. Don't forget that. Where you've got large gains, people get out to take their money. So don't get caught. Don't get caught. All right. Well,
that's awesome, man. I appreciate it.
No
appreciate
problem. That's it on the RSI tonight, everyone. Again, you're here with Sandy, VIPTradersInc.com. If you like this video, give us a like, support the channel, subscribe, and hey, don't forget to turn on that bell notification for next time I have a vid out. Appreciate everyone for stopping by. I'll see you next time. Thank you.